Good morning, everyone. This is Marshall Giller bringing you the morning comment for January 26th. So, SYRIZA wins. Now what? The left-wing SYRIZA party won the Greek election, as was widely expected. It'll probably have to enter into some sort of coalition, though, in order to have a majority in the parliament. This will complicate matters a bit, as all the coalition parties only agree with parts of the SYRIZA platform. Not to mention that SYRIZA itself is a coalition of various factions, not all of whom agree with their leaders' more moderate views. Now, as I mentioned on Friday, I think the SYRIZA victory is a good thing. I think it'll encourage a long overdue conversation in Europe about whether the current path of austerity is really the best way to get Europe growing again and enable countries to repay their debts. We'll know more later today when the regular ECOFIN meeting will probably discuss what the officials are going to do about Greece. Now, the problem is that some of what SYRIZA wants is contradictory. They intend to ask the Eurozone to extend Greece's debt and agree to a more expansive fiscal policy. It's questionable whether the officials will extend the debt, and if they do, why should they simultaneously allow a more expansive fiscal policy? SYRIZA intends to square this circle by improving tax collection, although that's never been possible before in Greece. We'll see if they can do it any better than previous governments. In any event, the first problem will be to prevent capital flight out of Greece and to secure an extension of the ECB's emergency liquidity assistance, which is what's keeping the Greek banking system afloat. I think the odds are that, initially at least, the headlines suggest more confrontation between Greece and EU officialdom and are therefore negative for the euro. Later, as reality sinks in, the two sides are likely to strike a deal that keeps Greece in the euro and keeps pressure on the country with probably some face-saving concessions to allow party leader Tsipras to accept the terms. For today, the main thing in the European day is the German IFO survey for January. All three indices are expected to have risen as falling oil prices boost sentiment. This comes on top of the strong ZEW survey released last Wednesday, yet it will probably not be enough to reverse the negative sentiment towards the euro. As for the rest of the week, the highlight will be the FOMC meeting on Wednesday. The minutes of the previous meeting show that the Fed isn't concerned about the stronger dollar and was concerned about the tight labor market, showing that it remained on track to hike rates. However, the weakness in the global economy could prompt Fed officials to reassess their outlook and push back expectations for a rate hike. There's no press conference scheduled for after the meeting. There's also an RBNZ meeting on Wednesday. At its December meeting, the bank stated that the next move in rates was likely to be up. However, following the sharp fall in New Zealand inflation in the fourth quarter, they may return to a neutral stance again. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.